Hello guys, in this video we are going to see about Unit 7 Continuity Part 3. If anyone not yet subscribed our channel, kindly subscribe, bookmark. First one, convention of consistency. See, if you are choosing a method for recording and reporting purpose, then same should be followed regularly in future also. Suppose if you want to change the method, you have to mention the reason and impact of the change. What are the problems that going to happen, what are the deviation that will be happened. Example, to calculate the depreciation, there are so many methods like straight line method, write down value, and then sum of the digit. In case first if you are choosing straight line method, then you have to use the same method in future also. Suppose if you want to change from straight line method to write down value method, then you have to mention the reason and what are the deviation that going to happen while changing the method. Okay, to change the method, why this much importance they are giving? They are totally two reasons. Accounting we are doing mainly for the comparison purpose only, to compare one company balance sheet to another company, or in same company Q1 versus Q2 or Q3. Suppose if you are changing this method frequently, it will be difficult to compare the accounting statement with other companies or within the company. This is the main reason. And then second reason, if you are changing the method frequently, you can easily manipulate because there will not be any continuity. Since you are changing one method to another method, you can able to easily manipulate and you can make a fraud. For these two reasons, they are asking to maintain same method regularly. Next step, going concern entity. Accounting assumes that business entity will continue for a long term, okay, until there is no sign it will be closed. That type of enterprises is viewed as going concern. Going concern means just an indication that company will run in long term. That's all. However, if accountant has a good reason to believe that business is going to close soon, then for example within 1 year or 2 years, then all the resources should be responded at the current value or liquidate value. Suppose if that business is going to close, then what the value of the company will be if assets are sold out and liabilities are paid off. Next is double entry system. In bookkeeping, there are totally two systems. One is single entry system and one more is double entry system. See, they given one example. Based on this example, I will explain you what is single entry system and what is double entry system. What they given, goods are sold on credit to customer. In this statement, totally two accounts will be affected. One is sales account and one more thing is customer account. As we seen earlier, every transaction has two aspects. Okay, if there is a credit, see, one is debit and other is credit, double effect. Likewise, if goods are sold on credit to customer has to pay the amount, so debit. If customer is account is debit means, then sales account should be credit. This is known as double entry system. That in double entry system, both debit account and credit account will be maintained. In single entry system, this one is not included. We will maintain only one account. Okay, only one account. Based on personal account only we will maintain. This is known as single entry system. The single entry system is time saving and economic because we are going to maintain only one account. So rather than maintaining two accounts, if we are maintaining only one account, it will be time saving. But it is unscientific. Okay, why means some transactions are not recorded and some transactions are partially recorded. In this case, we will not record this one. It means only partially only that entry is recorded in single entry system. In double entry system, each and every transaction are recorded dual aspect. As I said, debit and credit both will be recorded. Under single entry system, only one transaction. Okay, only one transaction means only personal is recorded, only personal account is recorded. Personal account means some person's account only mentioned and other aspect is ignored. Other aspect means impersonal account. Okay, we will see what is personal and impersonal account in next unit. In this unit they gave just the basic. Okay, for example they given, okay, account is, in this case only customer account is opened and debited but goods account is not opened in case of single entry system. Okay, under this system only account with absolute necessary goods account, only absolute necessary are maintained. Other account, nominal and real account, both are impersonal account. These things are not maintained in single entry system, but they will use the cash account. The account maintained with this single entry system is incomplete and unsymmetrical. It is not reliable, but some small firms, very small firms, they are using. Okay, they no need to make much accounting, so that they are using. But double entry system is used in all other area. Okay, because it is very accurate. Every transaction, debit and credit is maintained. Okay, every business transaction has dual effect. It means double entry system. The account that involves receiving aspect is debited. Okay, who is going to receive is debited, and account that involves giving aspect is credited. In accounting, there are totally three main laws are there. This is the first law. It will be given clearly in unit 8. See, personal account, real account, nominal account, debit the receiver and credit the giver. That is they given here. Debit the receiver, credit the giver. Okay, for example, if a customer depositing 10,000 rupees in his account, for example, Ram is depositing 10,000 rupees in his account. Okay, Ram giving the money is the giving aspect. Giving the money, his account is credited. Okay, if his account is credited, then one account should be debited. Bank receiving money. Okay, receiving aspect means debited. Bank receiving 10,000 rupees from Ram. Then our cash on hand account will be debited. For this, it's an example. In order to understand the debit and credit, to completely to understand, one must understand account. Account is like SB, current, FD, like that, all transaction to particular person. Okay, now only we are using accounts in system. Previously they are only ledgers. This is the basic outline of the how account is maintained. An account is vertically divided into two halves, just like English alphabet T. Okay, the left hand side is called debit side and it is mentioned in DR, and right hand side is known as credit. It is mentioned as CR. And in top you will write what is the account name, XYZ. Principle of double entry system. Every transaction, two parties must be interested. Okay, one is debit and corresponding credit should be there. Both the aspects should record in the account of book. Okay, this is twofold effect. Okay, what are the merits? In double entry system, both personal account and impersonal account is maintained. It is arithmetic accuracy since every debit has a corresponding credit. Detailed profit and loss we can able to find out. We can able to compare all the purchases, sales, expenditure, income current year with previous year, because we are maintaining separate account. Purchase account separately we are maintaining, sales account separately we are maintaining. So if you want what is the purchase of this year versus last year, we can easily find out. Next, at any point we can able to create balance sheet easily, and then we can't able to make any commission of fraud like mistake. We can't be able to do any mistakes. Suppose if we did any mistake, it can be easily rectified. It can be easily detected and rectified. It has more accuracy. Okay. Next one, principle of conservatism. Already we saw this one. Again they given all the anticipate no profit, provide for all possible loss. In extreme case we have to consider. In extreme case only what are the possible losses we are going to happen. We have to consider it is loss. What are the possible profit we are going to get, that should be ignored. That is what they given. And all contingent probable loss should be considered as loss only. Based on this concept, if you are having any inventory, cost value versus market value, which is having the low value, that value we have to consider. In extreme case, what is the value of that company? Like that only we have to consider. Revenue recognition and realization. There is a proverb that there is a many slip between cup and lip. Like that, anything may happen between the sales. Okay. So revenue is considered only when a sales is made and is legally liable to pay or we receive the money. Then only we will consider this one is as a revenue. Until that we won't consider. Anything may happen in between. Either after the sales we have to receive the amount or it should be legally liable to pay. Accrual and cash basis. See, accrual concept differentiate between receipt of cash and right to receive. Receipt of cash means you received cash, and right to receive means you will receive in future. And similarly, payment of cash and legal obligation to pay. First one, payment of cash means you paid the cash and you will definitely pay the cash. So these accrual and cash basis make a differentiate between these two and these two. In actual business, obligation to pay and the right to receive they won't consider. They will consider only actual cash movement happened. Then only they will consider. They given the example. Suppose sales of goods. You are going to make some sales. Okay. Revenue may be received maybe in two types. One is before the right to receive the arises. You didn't give any goods to the buyer. Before giving goods to the buyer, you received cash. Okay. Before the right. After the sales only you have to receive, but before giving goods you are getting the cash. This is known as right to receive. And next one, after the right to receive has been created, you gave the goods to the buyer, then you receive the cash. You have the right to receive. Okay, first one, before giving goods you are receiving money. Second one, after giving goods you are receiving money. Accrual concept provide guidelines. Okay, how we have to treat cash receipt and rights. Okay, in first case, the receipt will not be recognized as revenue. Before giving goods, you got the money. That thing they won't consider as revenue, because you may ask, I don't need the product, give me my money back, like that. In formal case, in a lateral case, the revenue will be recognized even though amount is received in the subsequent period. After giving the goods only you are going to receive the money, it is considered as revenue. Similarly, cash payment, there is a due, you have to make some payment. Suppose that payment you are making before the due date. Okay, if payment is made advanced, it will not be treated as expense. Okay, still there is no right that you have to pay. In this case, that person who receiving cash will be treated as debtor until due date comes. Suppose when expense incurred during the accounting period but no payment has been made. Suppose there is one more case, if due is there, if you are not going to pay the amount on due date or after the due date, then that person will become the creditor. Simply they are saying that accrual on cash basis, we have to receive the cash or pay the cash only after the dues, or legally we are going to receive. Next one, essential feature of this concept. Revenue is recognized as it is earned. Okay, only it is earned we will consider. Next, cost are matching against revenue. See, this is matching concept. This one, matching concept. What are the expense you are going to make? You are going to matching with revenue. Okay, for relevant time period only. For that, suppose some costs are not charged to income. Suppose some expense are not matching with income, then you will carry forward and keep continuous review. Even after continuous review, you can't be able to find out any income, means then it is written as loss. Okay friends, for watching video. If anyone not yet subscribed our channel, kindly subscribe, bookmark.